Golf is hard. Investing should be. A simple portfolio of a few low-cost index funds is likely to outperform the most complicated, expensive investment products on Wall Street. Called lazy portfolios, these investment strategies work if you have $100 or $100 million to invest. They also work if you are 50 years from retirement or already enjoying your golden years. There are dozens of lazy portfolios. In this article we'll look at 3 of the most popular ones. For each portfolio I'll include the compound annual growth rate, CAGR, using Portfolio Visualizer. The performance data covers January 2010 to May 2021, an important limitation we'll return to in a minute. I'll also include how long it would take to become a millionaire at that rate assuming one maxed out an IRA, $6,000 in 2021. By far the most popular, the 3-fund portfolio is all that a future millionaire needs. As the name suggests, it consists of just 3 asset classes. How much an investor allocates to each asset class will depend on their risk tolerance and investing time horizon. For long-term investors, an allocation of 55% US stocks, 35% international stocks, and 10% US bonds is a reasonable approach, but certainly not the only one. Investors can implement the 3-fund portfolio with index mutual funds or ETFs from a variety of fund providers. Here are a few examples. Time to Millionaire. TTM, 28 years. My friend Paul Merriman has constructed what he calls the ultimate buy and hold portfolio. For equities, it consists of 10 asset classes. Yes, that's a lot, although implementing it with a broker like M1 Finance makes managing the portfolio very easy. Here are the 10 asset classes. Note that the equity portfolio is weighted heavily with international stocks, small cap stocks, and value stocks. Historically, small cap and value have performed extremely well. In the last decade, however, large cap growth stocks have been the leaders. As such, over the time period measured for this article, the portfolio has lagged a bit. Over longer periods of time, say the past 5 decades, the strategy has performed extremely well. I calculated the performance without any exposure to bonds, although bonds should be added as an investor's risk tolerance and time to retirement dictate. Finally, the Warren Buffett Portfolio embodies Steve Jobs' philosophy that simplicity is the ultimate sophistication. It consists of just 2 asset classes, an S&P 500 index fund and a short-term US government bond fund. This portfolio comes from Mr. Buffett's 2013 letter to Berkshire shareholders. After noting that paid money managers aren't worth the cost, he described the instructions he has given the trustees on managing money he'll leave to his wife. This simple portfolio has outperformed the others over the past decade. Here's a snapshot of each portfolio's performance. Keep in mind that the last decade has seen large growth companies outperform other parts of the market. That's certain to change.